Hey guys, so today I want to talk about this trade I made at the end of July on Zoom where I made $1,200 in 12 minutes. Now this was a trade that I definitely wouldn't have been able to make when I first started trading, and I want to talk about what I learned along the way to be able to place this trade. In this video I'm going to talk about the trade, how I found the trade, my thought process during the trade, and what I learned along the way to be able to place it in the first place. So what happened? So at the end of July, the catalyst for this trade was that a bunch of US senators called for an investigation on Zoom, as well as a bunch of other Chinese companies, and even the rumors of banning TikTok started. Now this news was broken by several journal outlets like Wall Street Journal, Seeking Alpha, Market Watch, CNBC, and all that. As you can see, when the news came out, there's a sharp drop before reaching some sort of bottom, and then it started bouncing back up. That's where I placed my trade. So what was the exact trade that I make? Now actually this time I didn't buy shares and instead used options to take exposure in this trade. Now I bought 4 slightly out of the money puts on Zoom, and they were trading for around $3.25 at this time, and I sold them at $6.25, but they peaked around 7. Now this whole round trade from buying to selling actually only took 12 minutes because of how fast the prices dropped. Now as you can see on the chart, the prices didn't actually start dropping until here. And when it did, it went really fast, and that's when my puts actually went in the money. And a bit short time after, I sold the put. So what was my thought process when I placed this trade? Now first I saw the tweets from Twitter where they were saying this news about the US Senate investigation, and then I checked Twitter, and actually I was pretty lucky because I saw these tweets a few seconds after they were tweeted. After that I looked at the intraday chart, and actually the prices didn't move much. They were slightly dropping. And I also checked the option flow for Zoom at the time, and I saw some bearish puts being bought, and these were the July 31st 245 and 235 strike puts. So that was enough for me to be convicted on this trade, so I followed them in. And it was actually a combination of the charts, the news, and the options that made me convicted and made me go in on this trade. Once I was in this trade, I immediately looked for an exit, and I did so by pulling up a daily chart to find out where exactly a support would be. So I pulled up this chart, and then I saw in the past few sessions, the lower price range was at this level. So that was when I decided, okay, if the prices reached that level, I would sell. Now I sort of did some mental math in my head to be able to figure out what exactly the option price would be at that time, and it's not really easy because sometimes the options are mispriced and the premiums rise and all that. It sort of takes a few years of experience, or at least some experience, to be able to do that calculation in your head. And then when I found out what price the support was, I just set the option sell at that price and didn't really look at it. And that was how I was able to take 4 contracts of July 31st 245 puts, trading around $3.25 each and selling them at almost a double for $6.25, basically taking $1,200 in capital and turning it to $2,400 in capital in 12 minutes. Now I'm going to talk about what I learned and how I was able to place this trade through things like risk management and why I took the trade, and position sizes, things that are really important when you trade. Now, risk management is extremely important when placing a trade. You always have to think about your value at risk, which is the amount you're willing to lose on this trade. Now for me, my value at risk was around $600, which is around half the capital of the position size that I placed on this trade, and that was the amount I was willing to lose. You always have to think about the dollar amount you're willing to lose on each trade, or else you're going to get very easily shaken out of each trade, and that would actually cause you to lose more money instead of actually winning money. As for why I took the trade, there were 3 reasons. 1, I was early and the prices haven't moved much yet, and I was able to take this trade with less risk than I would have if I were to chase it. 2, I saw large money orders going the same direction that I wanted to place the trade in. And 3, there was news out that would have been potentially bad for the stock. As for position sizing, because I was trading weekly options, I had to take a relatively smaller position because those are highly probable in losing most of the capital before they expire. And that's why I only put in $1,200 in that trade, because I was willing to let most of that go if my thesis went wrong and if the trade went the other way. Basically, there are 3 lessons to be learned from this trade. 1, manage your capital and risk. 2, have good information like Twitter and option flows. And 3, always have an exit strategy and plan. I hope you learned something.